Fikri and Lay. I would love to welcome you all to our class for today. I want to welcome you all to Okay, so welcome everybody. I hope I'm loud and clear. Give me one in the chat if you can hear my voice. A one in the chat if you can hear my voice. A one in the chat. Okay, good. So the indicator we want to look at today, we could look at it in different perspectives. We could decide to use what we call the stochastic RSI, which is a common RSI. This is it here. So I will tap on it once and it opens up. Okay, this is the stochastic RSI. The two indicators I'm going to look at today, they are almost the same, but on the two, I love one more. So let me first get into the stochastic RSI. The stochastic RSI is not a lagging indicator, it's a real-time indicator. When I talk about real-time indicator, I'm trying to mean it is a type of an indicator that gives you information of what is happening now. I think I need to repeat that statement. It's a type of an indicator that gives you information of what is happening now. Okay. When a coin moves up, it moves up. When the coin moves down, it moves down. When the coin goes sideways, it goes sideways. Okay. So let us look at this indicator. And we get into the settings first. We tap on the setting icon, which is there. And the indicator has two lines. It has the K line and it has the D line. All right. It has the K line and it has the D line. These are just two thin lines that help you to see or to move with the movement of the market. And we are going to be able to learn them slowly. This indicator also has a line which we call the upper band. And in the upper band, that's where we say this coin has entered what we call overbought. Okay, overbought area, and that is the upper band. This indicator also has the middle band. And the middle band, that's where we say that this specific indicator is halfway. It is not in the overbought area, so it is in halfway of its journey. All right. Okay. Then the next thing, the next lower line is what we call the lower band, which is the lower line. And here we said this indicator shows that this particular trade has been oversold. Okay. And so here, this line, the upper band here is this one. And here, once the market gets into this area, we say it has been overbought. Then we have this middle, which is at 50. Okay, and here we could say that this indicator is halfway. So this is the middle. Okay, now we have this lower band, which is this one. Here we say this particular coin has been oversold. Now I have a question. If you're a trader, would you love to pick a coin that has been overbought, or you would love to pick a coin that has been oversold? Some answers in the chat. Would you love to pick a coin that has been overbought, or you would love to pick a coin that has been oversold? Some answers in the chat. Would you love to pick a coin that has been overbought, or do you want to pick a coin that has been oversold? Beautiful. You want to go in for a coin that has been oversold. Okay, good. Yeah. Good. All right. Okay. So now there are several decisions you could decide here. This upper line, mine is at 90. Someone may decide to say, I want mine to be at least at 80. This one usually remains at 50, halfway, and you could decide this. If you put the other one at 80, you could put this at 20. Okay? Or you could decide to say you want this to be at 90, at 50, and at 10. Okay, now these lines, the K, me, I love it to be a little bit thick for visibility. Okay, a little bit thick for visibility. And I love the blue color here. It is nice. I could maybe go in for the light blue. Okay, but the blue gives me the sense. So maybe it depends on your color choices. I'm not here to decide, but me, I love the blue color so much because it gives me that intensity that I'm looking for. All right. Okay, then after that, we have this. I love the orange color, but I could even go in for the yellow color since I'm using dark colors through. So if you're using a black screen, you usually want light colors so that you could have better visibility of your trades. Okay, so I would either go in for orange, which is my favorite, and the thickness, I would leave it at that so that I could have a better visibility of my indicator. And so the indicators are two here. One is the indicator that is basically with this line below that I've explained. Sorry, what's up? My fellow teacher, how are you? Any problem? Or you want to be? All right. Yeah. Madenka kusomeseza nonga tokalabya nti wavuddewo. All right, so we continue, guys. Sorry for that. So this is the area of oversold, and this is the area of overbought. I have a question. The coin that is seated on your screen, is it in the overbought area or it is in the oversold area? The coin that is seated on your screen, is it in the overbought area or it is in the oversold area? Some answers in the chat. The coin that is seated on your screen, is it in the overbought area or it is in the oversold area? Beautiful. Thank you so much. Now, as we decide to use the stochastic RSI as one of our tools for business, it is basically very important, ladies and gentlemen, to always enter our trades around this area, between this line and this line, especially if you are still very new in this area. Why? Because even if the market goes against you a little bit, you do not overfloat for a long time. But when you enter the market in this area and the market goes against you, you really stay very long in the market. Give me one in the chat if that my message is clear. Now, how do we use the stochastic RSI? That's where I want to base my sharing right now. The stochastic RSI has two lines. The stochastic RSI has two lines. Okay, the stochastic RSI has two lines. And we usually want to get in at the crossover. So where you see a crossover, that's the crossover. You draw there a vertical line. Okay, you draw there a vertical line. So let me draw the real line. So I can pick the vertical line and I press it there. So you draw there a vertical line. And after drawing there the vertical line at the crossover, at the close of the candle, you draw there a horizontal line or a horizontal ray at the close of the candle. So there you draw your horizontal ray. Remember, we said that trading is support and resistance. So you enter from here, you look in the past for your resistance, which is there basically and you also draw there a horizontal ray or a horizontal line, which is that. And so you come pick your price range from your entry at the crossover, and then you stretch it. You stretch it to your resistance, and you would have made yourself here a 1.73% take profit. And who notices that I'm in the 30 minutes time frame? Can we see? If you can see that I'm in the 30 minutes time frame, give me one in the chat. If you can see that I'm in the 30 minutes time frame, give me one in the chat. And that's where now I would have taken my 1.3%, 1.73%. And there we are using the stochastic RSI. So we get in at the crossover, and we must be able to draw lines of support and resistance so that we can be able to get entries and exits in the market. I will talk about lines you could use if you are not good at drawing support and resistance. I am going to, in the coming few days, I will come here and discuss in other indicators of support and resistance so that I could help someone who cannot draw support and resistance to use those indicators. But let me first finish with the stochastic RSI. So we get in at the crossover, and we must be able to use support and resistance to find our entry and our exit in the market. If you have been able to learn that, I want to switch on the same, almost the same indicator, but with a different perspective. Give me a 2 in the chat. If you're okay with that, give me a 2 in the chat. If you're okay with that, give me a 2 in the chat. Like I've said, last few closes, do not get in this area if you are not yet good in the market. Always plan your entries around this area, because for example, if you are drawn a vertical line at this area, a vertical line at that corner, let me draw it. You come here on your lines, you pick the vertical line, and then you come and draw your line. You drew your line there. I'm just giving an example. And I'm telling you, in the market, anything can happen with the news, and maybe things change a little bit, and you have drawn your vertical line there. And you have made your entry, let me say here, to your next resistance. Now, our next resistance, guys, is here. Our next resistance from our current price is here. So you would find maybe your take profit in the 30 minutes is very little, and maybe you want to stretch it a little bit to around there. Let me just draw around. The next one is around there. Okay. You enter from here and you plan to exit from there. Okay, don't. So from here to stretch up to there, it was around a 2%, which took off some more time than the normal time it was supposed to take. So although you might stay in for some floating times, but later you'll find that you'll be able to win through your trades. All right. Let me first help these people that are switching on their videos, switch them off so that I could be able to trade efficiently. Now, that is the stochastic RSI. Like I said, there's no perfect strategy, but at also the same time, it later delivered at around here after some time. So like I'll be able to add up indicators later in the near future. You should never use one indicator to determine the market. Okay, that is very important. We use not one indicator. You must be able to use other indicators. All right. Having talked about the stochastic RSI, allow me drastically drive you into my best indicator. So this one, I'll get it off. And this will take me to my next lesson. And this indicator is called RSI. It stands for Relative Strength Index. Relative Strength Index. Okay, so that is the indicator we are discussing right now. So this is my best indicator. It is my best indicator, and I'm gonna be defining it for you. So I will tap on it, then tap on the settings. It has the RSI, which is the purple line. If you want it to be better, maybe you could increase its thickness. I'm using purple simply because I'm using dark colors. So you should choose. Then it has the relative strength base moving average. When I talk about a moving average, if you understand what I mean, give me a 2 in the chat. When I talk about a moving average, if you understand what I'm saying, give me a 2 in the chat. When I talk about a moving average and you understand what I mean, give me a 2 in the chat. If you understand what I mean when I talk about a moving average, give me a 2 in the chat. If you understand what I mean when I talk about a moving average, and you basically understand me when I say a moving average, drop me a 2 in the chat. Drop me a 2 in the chat. When I say a moving average, okay, when I say a moving average, drop me a 2 in the chat. Because when I say moving average and you basically understand me, because I've talked about a moving average, give me a 2 in the chat. Good. All right. Just a minute. You know, there are people who are very lazy that for them, they need the link to be dropped in the chat every single day. Every single day, they want you wake up, you go in the chat and give them the link. Ladies and gentlemen, it's your business. It's not my business. When I drop the link once in your chat and it's the same link always, I believe it's your responsibility for you to make sure that you really attend using that link. Again, but then we move. Okay, so now I may not go into the upper Bollinger Bands, the lower Bollinger Bands on the relative strength index, because they may not be so much important for now. Our focus will be on these two, the relative strength index and the relative strength moving average. The rest, they could be important, but they are not so important. Okay, the rest I'm going to come back on the same indicator, but then let us raise up the upper band. So the upper band, I love usually the red color to be the upper band. And I love it to be a little bit thick to give me reality. And I love it to be not dotted, so I will make it line. And I love it at 70. I love it when it is at 70. Or if I want to stretch it up a little bit, maybe I would press it at 80, but I love it usually at 70. Then the middle line, I could leave it as it is. Then the lower line, I could give it either the yellow color, and then the thickness, I make it a little bit thick. And then I turn this dotted line, which is this one here, to a line. And basically, but since it resembles I will give it an orange color so that there is divergence of colors with no confusion. Okay, so here we are dealing with setting up the indicator. These other areas of a gradient field of oversold or overbought, these we shall discuss later. And let me now go into the input. So we want to come here and this is a simple moving average. Usually I love the exponential moving average. And it is a 14. For me, it is okay. I don't have any issues with it. Although someone may decide to say, I want mine to be of another aspect, but I love the default that is here. I personally have no issues. Okay. But someone may say, may I want it to be a simple moving average. Another one may leave it as it. But my focus is usually not on this smoothing line because it usually provides the average. The average. So since it's a 14, it looks at the previous 14 candles and gives you an average. As simple as that. Okay, but our focus is on this purple line. Our focus is on this purple line. So the middle line is not coming out very well. So to me, but it may differ from one person to another. So I may come back here. Good. I may come back here and then turn this middle line a little bit to maybe a line so that it comes out very well for me to be able to understand. Okay. Wow. All right. So now this is the indicator. It is my best indicator. Why? It's a real-time indicator. It's an indicator that gives information that is happening in the market at real time. When the market changes and decides to come down, this indicator will drastically drop down. Let me get back to these settings. My indicator is not looking very well. So let me first find out what did I set. You can always set your preferences. The settings I'm giving are not final, but mine is not looking very well. Okay, this is a 30, and I decided to use 80, so I'll drop this to a 20. It would stay as it was if I had left it at 70. Okay, so that's where we go. So this area is an overbought area. This is an oversold area, and this is 50%. But still, this indicator to me is not looking so nice. So I'll return it to the 70, which is the default, because there it gives me more sense. So I'll turn this to 70. Thank you, my teacher. All right. So then this I'll return it to 30. Don't take the I. All right. So there we go. Okay. So here above it's 70. Here it is 50, and here it is 30. So I want to play within this space. Okay. Now, ladies and gentlemen, allow me introduce another topic right now at this indicator to define what I'm trying to explain. And like you are able to see, someone is saying to learn better, turn your phone around. I'm using a PC. I don't know whether it's you using a phone. So what you do, you double tap on your screen. I'm not using a phone. I'm using a laptop. All right. So, ladies and gentlemen, how do we use this indicator? This indicator, we basically use what we call divergences. And I'm going to define a divergency. That's where I want to take you. So just look at it. This is the over, it's at 70. This is the overbought area. This is halfway, and this is the oversold. And these are the two indicators that are appearing here. Let me help this person switch off their video. So what we are going to put our focus on is what we call a divergency. And I want to explain it in a document. So I will first stop sharing. I'll first stop sharing. If you can see my screen, give me one in the chat. If you can be able to read the words, it is. Can you see it that way? Hey, student. Can you see it that way? Let me know which one is better. I'm failing to rule out. Is there better? Someone says no screen. Can you see it? Is it better that way or you are not seeing it? Let me know. Can you be able to read? Because basically, something is not happening. Good. Can you be able to see it better now? Is it better now? Good. Okay. My senior teacher is annoyed, but I will be able to handle. I'm sorry, I cannot work alone. If I work alone, she will cry the whole day. So just bear with me, guys. The good thing is not making any noise for us. So I cannot be able to work without her. So I'm very sorry. Okay. So what is seated on your screen, ladies and gentlemen, is what we call a trading strategy called relative strength index. Or what we call the relative strength index is a divergency. And relative strength index, these are popular for day trading. They are very popular for day trading. A day trader is someone who is able to look in the market and close their trades and be able to close their trades in a day. So in this topic, we are going to be learning what is a divergency, and we are going to be able to define what is a bullish relative strength index divergency, what is a bearish relative strength index divergency, what does a relative strength index divergency tell us, how to trade with divergences, how to find out bullish relative strength index divergences step by step, how to find relative strength index bearish divergences step by step. Let us start from the beginning. What is a divergency? An RSI divergency is a chart pattern where the RSI indicator is not synchronized with the price action. What do I mean to sync with the price action? It means that the price is going one direction while the RSI indicator is going in another direction. So when we talk about a divergence, ladies and gentlemen, we are saying that the market, when you look at your candles, they are speaking one direction, and the RSI is speaking another direction. Give me one in the chat if I'm clear. Give me one in the chat if I'm clear when I talk about a divergence. Like it is divert, okay? It is diverse. The two are not speaking the same language. That's what I mean. All right, let's run through. Okay, students, self-control. That's why we call it a divergence. It is very simple to spot. Let's give some examples of divergence. We can divide them into two: bullish divergence and bearish divergence chart patterns. Let's start with the. Let me get this person's video off. Please don't switch on your videos. They interrupt my sharing. That's why my video is off too. I would love you to be seeing me, but let's keep it business. So here we want to see the price making lower lows, and it's very important. Self-control. We want to see the market making lower lows. Just a minute, guys. There's something that's not working out. Just a minute. Something is not working out. You cannot have this copy, guys. I see people are saying, give us a copy. You can't have this copy. It's a copy that cannot be shared from where it is. I know people are saying, give us a copy. You can't have a copy of this, guys. You can either take a screenshot, but you cannot have a copy of this. Where this information is stored is non-shareable. Okay? So you can either take screenshots, but you cannot have copies of this. Thank you. I would love to give you, but you cannot be able to have copies. Not an ebook. Yeah, it's not an ebook. Mabriano, she's tired of learning now. She's getting stubborn. So here, ladies and gentlemen, here we want to, good. Here we want to see the price making lower lows. We want to see the price making lower lows. Okay, so white color. Here we shall see the price making lower lows. That's very important. And at the same time, we want to see the RSI indicator making higher lows. Higher lows. I'm going to show this in the explanation. So how does that happen is what I want to now be able to define. So here is an example. Okay, here is an example in your chart. Here is an example. You see, the market, this is what you call, if we are going to name this will be a higher high, and this will be a higher low. This will be a higher high. And then we see that the market now changes and forms what we call a lower low. So we see the market forming lower lows. These are lower lows. These are lower lows. These are lower lows. So these continuous lower lows, the market is forming lower lows. And what we are having here, this is what we call price action. Price action, it means simple, the price of the market in action. The price of the market in action. The price of the market in action is what we call price action. It is the price of the market. So you see that the market is forming lower points, lower points, lower points. So remember, I don't know now why this one is laughing in the chat. I don't know why. Because I've said you cannot get a copy of this. You can take screenshots if you are interested. I have no way of giving you some of these copies. Simply because, as you asked me, where did you get the information? Okay. So like it comes back to you. You also have no source of it. So I've told you the source where it is coming from. It cannot be shared. As simple as that. Keep it simple. Don't get emotional. Don't get attached to the training because nobody pays me. So it is important for you to get your ladders a little bit low and just understand, keep things simple. Don't take it out to be a big deal. Don't take it to be a big deal. I've told you it cannot be shared. Thank you. Thank you for it is encrypted information. So it cannot be shared. I can only share it here personally from where I can be able to access it. So don't make it a big deal. It's something small. Just keep it simple as long as I've given you the knowledge. So just move on with life. Okay. Now, what happens below is our, can we see that below is our relative strength index? And you see the market is forming lower lows, but the stochastic RSI is making higher lows. These are lower points. If we are able to draw, you see that here, you see the market is forming these lower points, but here the market is forming these higher points. This point is lower, but this one is higher. This one is higher, and this one is higher. So when you try to connect them, here you draw the line going down, but here you draw the line going up. And that's where the divergence comes from. Is that clear, guys? Or I repeat. When you connect, you're connecting these points. Here you draw the line. Here you draw the line going down, but here you draw the line going up. Am I clear? Am I clear? Give me one in the chat if I'm clear. Give me one in the chat if I'm clear. So once you are connecting these points here, you draw the line here like this. Then here you draw the line like this. Simple as that. Good. Okay. As simple as that. So this is what we call a bullish divergence. Okay. This is what we call a bullish divergence. And so the price was heading down, making lower lows. That's the price action. Initially, the RSI indicator was following the price. I hope you can be able to see. Initially, when the market was going down, you see also the indicator was following the price. At some point, the RSI starts to making higher lows while the price up is still going down. And that's what I showed you up there. So when this pattern happens, then we say the pattern has formed what we call a divergence. Am I clear? Am I clear? So that's when you see the divergence patterns. After the bullish divergence, the price will tend to form an downtrend to an uptrend. It will change from going down to going up, as simple as that. Now let's go to a bearish divergence. So after the divergence, like up here, you can be able to see, I have few more minutes, you can be able to see that after the divergence here, the market will now change into an uptrend. Give me a one in the chat if you have understood what a divergence means. It's one of the most common perfect ways of making money from the market. And if you do not understand this, you will suffer with the market. Now let's dive into a bearish divergence. Let's dive into a bearish divergence. How do you see that the market is going to go down? This one is the opposite of the bullish divergence pattern. We want to see the price making higher highs. And at the same time, we want to see the RSI indicator making lower highs. It's very simple to spot. And here is a bearish divergence pattern and how it looks like. Okay. So the price is making higher highs. Okay, the price is making higher highs, like you see above here. Okay. Let me try to a little bit balance my screen. Okay. So Like you see here, you are drawing your line. You are drawing your line, touching this point to this point. So the market is forming these higher highs. At the same time, when you come down to look at the stochastic RSI down here, do you see? The price is making higher highs. Remember, just a simple formula. Remember when we were drawing up there, we drew our line like this. But now we are drawing our stochastic line like this. Am I clear? Give me a 3 if I'm clear. The other side, you drew it upwards. Now you drew it downwards. Remember, when we were looking at the other side of the stochastic RSI of the bullish one, remember we drew like here. And when we are drawing, like for example, you see here, when you connect this, when when we are drawing, you see here, this one, the market is following. So here, you cannot say that this was the bullish divergence. I don't know if now I'm making sense, because the market is making the same move. But what we call a divergence is that you are drawing it like this, but the other side, you are drawing it like this. I don't know if I'm making sense, but that was the bullish divergence. Now the bearish, you are connecting. So the difference is simple. Here, the market is making higher highs, yet the divergence, the price, you see that the market is making these higher highs, you are touching these points, yet the divergence that we are trying to draw here is making the opposite. As simple as that. I don't know if I say the opposite, people can understand me, but that's what I mean. So this is what I mean. But then later, we noticed that at first the RSI was moving with the price. As the price made higher highs, the RSI made higher highs too. But later, at some point, the price kept on making higher highs, but the RSI did not follow. And it started making lower highs. Then our bearish divergence appeared. Now, what does the RSI divergence tell us? The RSI divergence is a powerful trend change signal. It's a powerful trend change signal that the market that was going up is now going down. And the market that was going down is now going up. Am I making sense? Give me a 1 in the chat if I'm making sense. Give me a 1 in the chat that I'm making sense. It's a powerful change in the trend. So if someone could be able to identify divergences while doing technical analysis, you could know that this coin that I'm too much excited about, that I believe will continue going up, this coin that I believe will give me a lot of money, has changed now. It's going to start going down. So when we spot a bearish divergence, we should expect a change in a trend from bullish to bearish. And still on the other hand, when we spot a bearish divergence, let me help someone switch off their camera, because I see someone wants their camera to be on so that they can focus more. Let me help switch off their camera. So on the other hand, ladies and gentlemen, when we talk about a bearish divergence, people with switching on your cameras, please just stop. On the other hand, when a bullish divergence appears on our chart, we should be careful because a trend change to the upwards may be imminent. It means that the market might change immediately. So how do we trade with divergences? RSI divergences can be used to open trades as well as close trades. So you could use these divergences to either open up a trade and get into the market, or close up a trade. When used to open up trades, we expect to trade a trend that may be about to start. That the trend of an upward trend may about to start. If we use divergences to close trades, we use the signal to get out of the market when the RSI divergence signal against our trade direction appears. I hope it makes sense. The market was going up. The market had showed you a bullish divergence, but as soon as it has showed you a bullish divergence, you see a bearish divergence coming in. So you enter on a bullish divergence, but as you are still in a trade, you see a bearish divergence coming in. That's when you exit the market. So how do we find a bullish divergence step by step? How do we find a bullish divergence step by step? I want to be very fast and I come to the end, but it seems I have a long journey. So, and it's already 8:35. I would request to stop here. I will continue with the divergences tomorrow because of time. Yeah, because I see it's 8:35. Too much of anything is bad. So far, we have been able to, but let me just teach you how you identify. Let me end with identification. Step one, find a downtrend. If you want to deal with divergences and be able to have them at your fingertips, the first thing, ladies and gentlemen, is to make sure that first things first, with no decree, make sure that you find a downward trend. If you understand what I mean by finding a downward trend, give me a 5 in the chart. If you understand, when I say find a downward trend, you understand what I mean. When I say find a downward trend, you understand what I mean. Give me a 5 in the chart. For those of you who are new, I told you you will need to start the classes over again because I may not be able to repeat everything. If you understand a downward trend, when I say find a downward trend, okay, good. All right. So let me just... Okay. Now, for the bullish divergence, we want to be watching a market that is on a downward trend. So when you find a market that is going down, that's where you want to put your focus. We do not necessarily want a downtrend that is going on for a long time. Since a divergence, who has been able to unmute themselves? I don't understand. Did I work on my settings right? I hope it's well now. Okay, so we do not want unnecessarily a trend that is going down for a very long time. Since a divergence can be found inside markets that are ranging sideways. You see, we are not looking for a coin that is overdropping. We can even find divergences in sideways market. Here is a scenario of consecutive lows that we're trying to talk about. Can we see? Can we see? This coin is on a downward trend. Give me a 3 in the chart if you can understand this chart. So if you can see consecutively, this coin is on a downward trend. Beautiful. Okay. Okay. Now, watch the RSI as prices are low. So now you have identified a downward trend. Now that we have spotted these price lows, we want to see When the RSI indicator is showing us those lows, this is what we have got. Look at this, guys, very clearly. Do you see? Now I want you to watch the RSI. Can you see the RSI? Do you see how it's forming those lowest points? Moving on with the market. Whenever the market forms a low, it also forms it. I don't know if you can see that. I may not be able to squeeze it so much for you, but these arrows help you to identify. Can you see that when the market forms the low up there, like in this example, also the RSI does it? Give me a 3 in the chart. In the chart. Give me a 3 in the chart if you can see that. Please, starters, you attend these trainings again. We have been here for close to over 2 months. How dare you say that you has joined this for the first time, you'll be able to grasp what I'm talking about? People have been here for some time. Is it easy? People have been here for some time. Is it easy? For someone who's just joining now to grasp whatever I'm talking about, you need to start your own journey. If you have just joined these classes, maybe you would learn something today, and you keep on starting over the classes afresh. That's why I'm asking. People have been here for some good time. Is it easy for someone to grasp whatever I'm talking about now? No. These lessons are very good for people who have been here for some time. They understand what I'm talking about, because I'm now, whatever we have been teaching, I'm now using it in a normal way. Imagine I've been doing this for some time. I'm now teaching it in a normal way. I'm using languages, words that you may not be able to understand, because I taught these words at the start. So now when I'm using them, I'm not scared that I'm talking about something they don't understand. Give me one in the chat if I'm clear. I know people might be getting annoyed, but I've been teaching this for some good time. Now I'm free to use the languages, because whatever language I'm using now, I have been using it and I've taught it to them. So now I'm just using it in a normal way. So I may not say now this one I mean here, because now I'm doing my last touches to the class. So if you are new, you can stay in, because it will give you a better understanding. Number 3, connect the lower lows and find a divergency. Connect the lower lows and find a divergence. Now, let me show you guys. Let me try to minimize. Let me try to minimize so that I give you the picture. Look here. Can we see that when I connect this point to this point, it's still the same point here to here? When I connect this point to this point, do you see that same here to here? When I connect this point to this point, do you see that it is the same from here to here? But do you see now, from here, I connect here. But do you see that here, I will connect from here to here? Give me one in the chat if you have seen that. Give me one in the chat if you can see that. Now, this is what we call a divergency. Give me a 2 in the chat if you have seen it. Now, you see that, this, and this. Can you see the difference? Can you see the difference? Can you see the difference? Do you see that here, I connect this lowest point to this lowest point? But now here, I connect this lowest point to this lowest point. Do you see that immediately the market goes up? Give me a 5 if it is clear. Do you see that after that, immediately the market goes up? Give me a 5 in the chat. And so you make your entry and you make your exit. That's why I said you need to be crystal keen on divergences, because the market goes up immediately. It goes up. So your trading aspect is sitting in identifying the divergence. So step number 1, like I said, identify a downward trend. Identify a market that's forming those lowest points. Look at the RSI. Look at how the RSI is forming. Very important. Is it forming? By the way, you need to be very keen. Then after here, we see a divergence. Am I clear? So let's now still continue with our slide a little bit. And we do our last touches. Can we see the difference? Now, each line or trend should connect on 2 consecutive lows. Let each line connect on 2 consecutive lows. You see, you connect this low with this low. Then you connect this low with this low. Then you connect this low with this low, this low with this low. Then you connect this low with this low. And we do this both on price action or price lows and RSI lows. You can use 2 colors to make it simpler. The red line is pointing down and the green line is pointing up. You see, the red one pointing down and the green one pointing up. Find the divergence equal to different color lines. The line have a color just to be easy to find the divergence. Is this easy or it's hard? Because that is trading for you guys. I wanna create a crypto ambassador community that is very professional when it comes to financial markets. Is that easy or it's hard, guys? Let me know. Is that easy or it's hard? Let me know. Is that easy or it's hard? Can we see this? Now I need to change my go. What border? Just a minute, guys. Focus on. Okay, now I don't want to go into the bearish divergence, but that is how you identify. So now we are going into another one. So yeah, so now it's done. When the bullish divergence is spotted, now it's now changing to another page. But I believe it's now most clear. So that let's see if I've left something. So now here, that's where you make your entry. So as you can see, the price started moving up after the bearish was formed. When the bullish divergence is spotted, 2 things. 1, close your short position if it was open. What do we mean by closing your short position? I told you when I started these calls that a short is when you predict the market to be going down. For example, imagine you had predicted that this coin is going to continue going down. continue going down, continue going down. If you see a divergence, get out of the trade, because what's going to happen is the opposite of the market. I hope you see after the divergence, it was discovered, and we see that the market started forming an upward movement. We have said divergences indicate change of trend. Remember a statement, the market is not our friend, but the market trend can be our friend. If you are able to identify a market trend, divergences are very important because they help us identify the trend of the market. Imagine if you identify that the market that was going down is now going up, what will happen? Some answers in the chat. If you identify that the market that was going up is now going down, the market was going down is now going up, what will happen? What will happen? Some answers in the chat. What will happen? If you have the power to identify a trend, now divergences are very important because they help us identify the trend of the market, the change. The market was going down and you have been able to identify a market. So that's what we call an upward trend. Okay, guys. Now let's just now get into a market very shortly in 1 minute and see if we could find a divergence. Let's get in the market in 1 minute and we could find a divergence. We said step number 1 of finding a divergence, ladies and gentlemen, is to find a market on a downward trend. So always be clear. You need to find a market that's on a downward trend. And the formula is simple. A market that's on a downward trend, ladies and gentlemen, you don't need to sweat so much. You'll find that the RSI will always form these points. As simple as that. And like we have said, you will always connect consecutive lower lows together. You should not confuse, because what's going to happen with most of you is the confusion zone. Let me first return it to normal. And we all see, for example, this will not be, let me look for a market that is going down perfectly. I may not find one, but maybe. But remember also, we are not looking for a market that is overdropping. Give me a 3 in the chat if that is also clear. We are not looking for a market that is overdropping. Give me a 3 in the chat because I discussed that. We are not looking for a coin that is there dropping for. So we are looking for a coin that is basically dropping, but that's not going on a down trend for the rest of its life. Now that's identification. I hope that is very clear. So I'm not here to look for coins that are overdropping. Okay. Right. I'm in 30 minutes, so you know what happens in 30 minutes. But we can do this in any time frame. Let me stay in 30 minutes. Okay, can we see this is a lower low, but it's not forming another lower low. Then something is not connecting there. So let me look for another one trade. Not connecting, another trade. But I'm in 30 minutes. There's a lot of noise here. So I will change. I wanted to find a coin. Okay, but here is an example. But I wanted to find a coin that I give you something that is current, but because of time. Okay, can we see when we connect this point to this point, then this point to this point? Can we see, guys? Can we see? Then from here, can we see from this point? Now I'm concluding. From this point to this point, can we see a divergence? But it's not so perfect. That's why I'm not liking it so much. It's not so perfect, but at this point here, this one, the market continued going down from here to here, but the stochastic RSI was forming this to this. It's not so perfect, but because of time, I may not be able to spend a lot of time looking. The good thing, can we see? This is 4-hour time frame. I connect just to close. For now, I connect this point to this point, this point to this point, this point to this point. But now from this point here, the market continues down here. But here, the market changes. If you see the change, give me a 5 in the chart. The market changes from this point to this point. Give me a 5 in the chart if you can see. There is this difference. Let me draw the line. To help you. From this point to this point, there is a divergence. If you have seen a divergence, give me a yes in the chat. If you have seen the divergence, give me a yes in the chat. Can you see that after here, after the divergence here, after the divergence here, can we see that the market formed from here? It formed an uptrend. And if you understand, when we talk about support and resistance, you could enter from there and you get out from here. Do you see that from your entry immediately after the divergence? Can you see that you could make, maybe from the close of this candle, do you see that you could have made a 10%? Mm. And still, I haven't talked about the bearish divergence, but let me show you. Because now I know. Do you see the market forming from here to here? It's still the same thing, here to here. But now things start to change. The market forms a divergence at that point, and you see what's happening. So we are going to discuss tomorrow the bearish divergence. I don't want to go into it, but I think someone is able to understand divergences. Can we look at Akin here? You know, divergences are very easy to spot. Who has seen a divergence here? Let me use the red colors. I told you strategy, I connect to this point, so I use the red to this point. Then I connect this point to this point. Can we see that there is a divergence here from this lowest point, from here to here? Give me a 6 if you can see this divergence here. Let me draw it again. This is my last example. From this point to this point, the market is going down. From this point to this point, the market is going down. From this point to this point, the market is going down. And it's still happening from here to here to here, good. From here to here, good. But can we see that from here to here, it is a divergence? So let me draw there a vertical line to show you the area. Can we see what happened later, guys? From this point, can we see that the market went massively up? And if you know how to draw support and resistance, then you are in business, because you'll be able to understand that you'll get out from here, from this entry here. And if we measure, how much take profit is that? From this point, this is a 12%. Is that business? Divergences. They are very important, guys. Very, very important. Thank you so much for today's lesson. We have learned about the stochastic RSI, and we have learned about the relative strength index indicator. Or some people, let me check if it's there. Some people usually look for the other one. They call it the RSI indicator. But I don't believe it's there. Let us see. The RSI indicator. Now this is system alpha. I don't understand that. So that's why now this one is RSI and stochastic RSI combined. Let me see how this looks like. Something went wrong. Try again later. Okay, I don't know what went wrong, but I think two of them cannot be at the same time. Let me see how that looks like. Let me see how that looks like. Guys, they said something, RSI indicator. Something went wrong. So I will die on mine. Now, if you're not good at drawing divergences, there is an RSI that something went wrong. Something went wrong again. Now here, if you don't know how to draw divergences, you can come on this RSI indicator. Then you come down here. Why is this not showing as I did? So let me set it up lastly. As we close. Okay. If you're not good at drawing divergences, what you can do, you can come here and instruct this indicator to show you the divergence yourself, although they may not be so perfect. So you can come here on the settings, then you come down here. You come down in here and where is it? Maybe it's here on the input. Let me see. Show divergences, all right? Can we see? It will show you the divergences for you. Can we see? It will show you divergences. But when you know how to draw them for yourself, so it will always show you the divergences. Whether it's a bearish divergence, it will show it to you. If it's a bullish divergence, it will show it to you. So it will help you if you are not good at drawing the divergence. but you'll miss out on so many opportunities. So you can always see it shows you the divergency here. It shows the divergency. Shows the divergency. It will keep on showing the divergences for you. But when you know how to draw it yourself, man, you're another level. You're another level because you'll be able to see opportunities before the indicator sees them for you. I hope can you see the divergency? But like you see, it shows it showed this divergency here, which was a good one, but it was not the best. You see, the best divergency was here. Give me one in the chat if I'm clear. You see, the best divergence was here, but it showed you a divergence just here, which was good, but was not the perfect one. Give me one in the chat. Give me one in the chat. Someone says, my subscription has just been made. My subscription has just been made. Because I removed this indicator, I would see it. Maybe it's network. Let me see. Maybe you are right. Yeah, maybe you're right. But does it now do an indicator? I'm gonna find out. I'll find out. Okay, but the divergence is very strong when you know how to really find it out. It's a very strong money making tool because you see here, you need to learn how to draw it yourself because like it showed here, but there was a strong divergence just here at the bottom of the market. Just here at the bottom of the market. So you must be a little bit smart to find the divergence by yourself. Once you learn how to draw it by yourself, my friend, you'll enjoy this market. Guys, thank you so much. Love you all. Wow. Love you all. Love you all. And I wish you a perfect day. See you tomorrow. Bye, everybody. Thank you. And have a nice day. Bye, everyone.